This is Dan Dix here reporting for Press for Truth. We've got a great show lined up for you today, my friend, so let's just jump right into it. Joining us on the line right now is our friend Lior Gantz of Wealth Research Group. WealthResearchGroup.com is the website. Lior, thanks so much for joining us again, my friend. The last time we spoke, the crypto space was booming. Everyone was feeling rather bullish, but things have changed in the last month or so. Now, a lot of people are attributing this to Elon Musk's tweets, but I'm not so sure one man has that much control over the entire crypto space. Maybe he does, maybe he doesn't. I don't know. What do you make of the recent epic crypto crash?
Well, first of all, if he does, then it's really bad, right? It's a very immature market. But no, I don't think he has that much pull. And obviously, we're talking about tens of billions that are changing hands every single day, just in Bitcoin alone, let alone the entire crypto and altcoin space. I think the last time I was on your show, I told you, like, you were asking me, so are you buying? And I said I never buy cryptos unless it's after a big 50 to 80% decline. I never do. And so that's the one thing to learn about crypto and Bitcoin. It's you either buy it when it's really a disgusting trade, or you need to be a good trader and know when you want to get in, get out. But for most people, it's just about waiting until there's a capitulation. There's a lot of selling, a lot of despair. The retail crowd is out, and then it's much safer to get involved. And usually there's like a big epic decline like we saw a few weeks ago. It bounces back, like pulls all these new traders in, and then has another smash to get them out. And that's what we saw in recent while. So, and by the way, look at the chart. You'll see that SNL was the top for this whole thing. It literally was. And I think that usually you'll see an event like that, like a rock show type event, like a SNL or other things, and then you'll see a lot of tweets from celebrities, and everyone's in. So if everyone's in, who's buying? Who are the next buyers? You need to see some big selling, some profit taking, and then the markets can reach equilibrium. And at those points, when it reaches a mainstream event like SNL, you're at the end of whatever cycle you are. It's like with ARK Invest, with what you saw with Cathie Wood, where she's everywhere. Like everyone's using her thumbnail on YouTube. It's a cult. And then once that's over, then there's real opportunities. If there is something to it, you need to wait for those big capitulation moments. So that's just in general what I think. Now, I didn't like when they started to say crypto will never have another bear market again, because the last bear market was just retail people. Now there's institutions. They're going to support this. Forget all that. Whenever you hear those kinds of things, those are bubble type talks. Wait for despair. Wait for it to go outside of the news. Even now, when everyone, like on this show that we're talking about the crypto crash, it means the crash isn't over. You need to stop even talking about the crash. You need to stop caring about crypto for it to be a new buying opportunity. I've seen that so many times in so many different companies, like stocks. I remember wanting to buy Intel. This was like 2013. Intel, like the chip manufacturer. And it was everywhere that the PC is done. Nobody will ever buy PCs again. We have tablets now, and like it was everywhere. And I said, it's approaching that moment, but I need people to stop talking about Intel being like a foregone company. And then I bought it at like 22 a share, and like never thought about it again. Went to about 60, and then new talks started to happen last year that Intel is being taken over by NVIDIA, et cetera, et cetera. Went to like $45. People stop talking about it. You buy again. It's at, I think, 60. So the idea here is when something's hot, you missed it.
Right.
Or there's a few percentage points of squeeze there. You need to be really an expert at trading this. When people are talking about on the bet side, there's still room for a final washout. But when it's out of the the circuit of talking altogether, then there's real opportunity there if there's some merit to the idea in the first place.
Well, I guess that begs the question, are we venturing into that territory just yet? Or are we still in that euphoria state of crypto where people are still trying to flood in? I guess that's the big question right now.
It's called denial.
Are we in a bull market or a bear market for crypto, do you think?
Well, we're in a bear market for crypto, but the bear market for crypto can last a few months. It doesn't. It's these cycles are not like with the stocks where it's like a year and a half, 2 years.
Right.
These are very quick cycles that you see with crypto. But of course, we're in a bear market, though. We just had a 50% and even greater decline.
I mean, we've seen these kind of corrections before in the past,
exactly.
and they've been followed by rather large spikes. So it remains to be seen.
Exactly. So we're in a bear market, but whether or not it's a bear market that's going to quickly change or stay with us, I think the fact that you're even asking me this question means that it probably has more to go. Because everyone right now, the stage that we're in is called denial. It's where everyone thinks it's a bull market, it's a buying the dip opportunity, and there's more to it. Now, the fact that Jim Cramer's all over the news for selling all of his coins, it means that you're at the later stages of the sell-off. But it doesn't mean that we don't get this quiet period where it just trades around that 25,000 range or maybe even 20 for a few months before we have a new cycle forming. Remember the last one, it went to 20,000. I remember my partner's maid asked him how to purchase Bitcoin. That's when he said, that's it, I'm done. It was like 18,000. I think it peaked like 2 weeks later. It went down to like 10, stayed there for a few months, then went down to 5, then to 3,000. And then stayed there for a while, jumped to 5, nobody was talking about it, jumped to 10, nobody was talking about it, and then started to create a new base of retail traders. So these things take a while if this is a real big capitulation. Mm-hmm. The one thing that nobody's talking about is look at the dollar. The dollar is a big part of what's going on. The dollar was in a severe bear market starting April 2020 and up until recently. It reached 90 points on the DXY, and I suggest every one of your listeners go and just have the DXY pulled up every day on his computer. That index is the dollar index compared to other fiat currencies. When it is around 90 points, it's at the 7-year support level. If it drops below that, goes to like 88, 87, 86, you're in a severe bear market for the dollar, which means very good for commodities, extremely good for gold and silver, superb for cryptocurrencies. It was hovering that 90 point level for like 3 weeks now, and I kept, at Wealth Research Group, at our newsletter, I kept saying, just hold on, we need to see it break it. Don't do any moves until we see where this goes, because if it can stay above this support level, you're going to see a brutal sell-off in cryptos and gold and everything. And sure enough, the Fed said inflation is transitory, but getting hot. We'll probably need to tighten before we thought. And boom, the dollar goes up by 1% one day. Now, for people that are doing currency trading, they know 1% is like 10% for the S&P 500 in one way. It's a big, decisive move. And it then did another one. So now we're at 92 points on the DXY. It's a very decisive bullish move for gold, for the dollar. I would be very cautious. Now, if you're not a trader, if this is like, oh man, I have no crypto, like literally, I have no crypto in my life or no gold in my life, then this is a buying opportunity. Whether or not it goes to like 20,000 on crypto or it goes another $100 down for gold. If you have no gold or no Bitcoin and you want to have some, then you just got a 50% discount in Bitcoin, like what, 3 weeks? And you just got a very good discount in gold. Gold doesn't go down by 50%. in 2 weeks. It's just not the kind of asset it is. But it went from 1950 to 1700 in just a few days. And so if you don't have any, or silver, for example, so it just depends on your strategy. If this is, I'm going to own this for the next 25 years and give it along to my children at the end of this, then, big move down. Why not? If you're a trader, I think there's more downside potential for both before we see some big moves to the upside, because was a very decisive move for the dollar.
Well, it sounds like you're pretty bullish in the long term on cryptos in general, but there's so many right now. There are thousands of cryptos, and a lot of people are diversifying. They're spreading it out. But you have those Bitcoin maximalists who say, just stick to the one golden, Bitcoin. Where do you stand on that? Should people diversify in the cryptocurrency space a little bit, or consolidate within some of the top-notch ones like crypto and Bitcoin and Ethereum?
I have always thought that it's easier to understand that Bitcoin is a real cryptocurrency. There are a few other ones that are real cryptocurrencies, and then the rest are more like tech companies. Treat them like tech companies. So do you think their technology is disruptive? Do you think that their technology is competitive? What do you think about their technology, their use case? They're much more of a technology company than a real currency. Bitcoin can really be turned into a medium of exchange for the popular use in the future. You put Visa technology on it, or American Express, or whatever. You can really use that. I think other ones are more going to be like tech companies. It's going to be a niche that they're going to be able to serve a certain public, a certain industry, et cetera, et cetera. So I think that's the big difference between them. And then when you go down the list, let's say between 1 billion at market cap and less, now you're talking about startup companies. So think about them as startups. In other words, for every 19 that will fail, one will probably do well over the long term. And think about it that way, that you're swinging for the fences here. You're going for, basically, if you buy a basket of 20 of them that you like, and one of them becomes a winner, let it ride, take the other ones, sell them at 25% loss, be done with it. And then if your strategy overall is correct, then those 25% losses will be covered by the fact that one of them will become a real big, a real big company one day.
Right. Yeah, no, that's a good call. I mean, so many people are getting absolutely wrecked in this space. A lot of retail investors are just flooding in because of the FOMO, the classic fear of missing out. But as you said, when things are euphoric like that, when all the hype is happening, when the big stars are on Saturday Night Live, this is the time to take a notice that, hey, maybe it's time to take profits, right? Maybe we can talk a little bit about that, because taking profits is important along the way. A lot of these people wouldn't feel so uncomfortable right now if they were up, if they had taken profits along the way. But a lot of people are feeling, oh man, I maybe should have done something last month. And so maybe you can talk a little bit about that process and important step of crypto investing in taking profits all along the way.
You know what? I think that's the best question I've heard in a while, because I see a social movement on YouTube and everywhere else where younger millennials, etc., they feel like it's a shame to take profits. They have two terms that they're using: diamond hands and whatever, sissy hands or weak hands, etc. And those are sellers. But here's the thing: you're not a weak hands is selling when you're down a lot, okay, giving up on something. That's not the same as taking profits. Taking profits, and remember, with crypto, there's three ways about it. It's either going up, down, or not moving. No matter what it is, you're not getting a dividend. This is not an income earning asset. This is not like holding a house where you're getting a rent, right? Then the price can go up or down or move sideways. It doesn't matter to you because you're there for the income. This is a vehicle for appreciation or depreciation. That's all it is. Either you sell it to somebody at the higher price or you sell it to somebody at the lower price, or you don't sell it, but you're not going to earn any income. And so taking profits is a major step.
Right.
The way to create a self-dividend for yourself is to take a little bit of profit. In other words, if you have a $50,000 position, just turned to 100,000. Well, think about the fact that you can take a dividend on these on the 50,000 that you just earned by selling a little bit. And selling a little bit also helps you if you want to buy in later. Let's say you bought it at 50, went to 100, you sold 20 grand. Now the remainder 80 went back to 40. You can buy in, okay? Right. Or it's a different type of strategy. So I think taking profits is a major part of how people should think about these things, and also they need to compare it to other asset classes. In
That's
Bitcoin,
yes, yeah. I mean, I like the point you made about earning an income. Like if you were actually trying to generate revenue here, aren't you going to have to take some of that in every now and then? Because
absolutely,
yeah,
absolutely. Look, for example, I'll give you the classic example. Berkshire Hathaway never paid a dividend, right? Warren Buffett's company. And he said, we will never pay a dividend. The idea of not paying a dividend for a publicly traded company is that the CEO of the company believes that instead of distributing cash out to the shareholders, he can internally create a rate of return that's bigger than what you can do on your own. So in other words, instead of giving you $1,000 worth of dividends, he can reinvest those $1,000 for you and generate more wealth. Okay, so that's why Berkshire Hathaway, for example, doesn't do a dividend. But a shareholder asked him, well, what if we want a dividend? He said, well, why don't you sell a few shares? Every time you want us to have a dividend, sell a few shares. And then you can do what you want with it. You think
like challenging their greed.
Yes, but it's also it's very smart, because it doesn't create an income for you. Now, the fact that Bitcoin doesn't pay a dividend doesn't make it a less favorable investment, because the rate of return that Bitcoin has been able to create, nothing in history has ever done that. Nothing.
Yeah.
And so the idea here is that the internal rate of growth for Bitcoin has been so fast that taking a dividend thus far has been a destructive idea. If you just held on, it proved itself to be an incredible decision. So the idea is that people have created this term called HODL, which means that, my God, why sell? Just live through all this volatility, because the end result is that you'll be up. And that is proven to be correct. So your mind is conflicted. On one hand, doing nothing has been the most constructive thing, while trying to be going in and out has been the unproductive thing. But what I've always done is I created two baskets. And I've said, well, okay, one basket, I'll let these guys win. I'll buy and do nothing. That'll be one basket. The other basket, I will do what I think is favorable, and I will create income for myself by buying after big lows, letting it ride, and selling. And so having these two baskets, the HODL basket and the trading basket, that's something that I think most people should consider. If you have these two versions of you, now you can take advantage of it, and you're hedging yourself. And in the end, if it continues to go up in price and up in value because of mass adoption, because of the network effect, because of the scarcity effect, because of all the usual things that have made it go up until now, well, you're winning on both ends. So I think in the bottom line, doing this split mentality is good. And I have that split mentality in stocks as well. For example, the dividend part of the portfolio where you buy these blue chips, man, those are forever. Unless something happens and a new company is able to disrupt an existing industry with a dominator, For example, American Express or something that I bought like in 2009 for $10 a share. It's now 160 a share. If somebody comes in and disrupts that, fine. But in the meantime, one trade, one fee, one buy order, and 11 years later, it's up 16-fold. On the flip side, I have a tech portfolio, and you go in and out, right? So it's different. If you go to our website, we created a tab that's called watch lists, and you can actually download. There are now 10 watch lists. I think it's over 100 companies in there, and those are all the companies that I own in my portfolio. Now I don't own all of the 100 because some of them we've sold, some of them are we've never bought because they were above those limit orders that I placed inside these watch lists. But you can look at everything we do, and I cover that constantly in the newsletter, for example. So for just 1 month ago, a month and a half ago, on May 4th, we issued like an alert about this company that's in SaaS, software as a service, and it rallied 80% in 40 days. So I just issued a solar, for example, right? 80% 1 month. That's something that's not normal. On the flip side, you have companies that we will never sell probably unless they're disrupted. So I have that mentality also in the stocks. Then I take that mentality also to precious metals. Physical metals, I buy after big sell-offs like the one we had and never sell. Those will be passed on to my children. Mining stocks, on the flip side, God forbid if you hold on to them, they don't do anything in the long run. They're like a polygraph. You need to buy them when they're really bad and sell them when they're really good. It's a trade. So that mentality works in all areas of even in real estate. Rentals, hold on. Land, you want to flip it, right? You want to parcelize the land and flip it to somebody that is the constructor who will actually develop it, etc. So it works in everything, Dan. I think that mentality that you have a short-term portfolio and a long-term portfolio is really good. And that's actually what Warren Buffett missed out on. If he would have done that, Berkshire would have been the biggest company in the world, because in his mind, he has blind spots. For example, if he would have bought gold instead of just holding cash, because he has like this cash buffer, right? $100 billion in a cash buffer. If half of that would have been gold for the past 50 years, Berkshire would have been a $1.5 to $2 trillion company. Would have been bigger than Apple. He has a blind spot. He missed out on, so that's what I'm saying. Don't have that blind spot. Don't just say, I like this. Have the whole strategy. It takes more time, more expertise. I also think it's more fun. So if you like that, exploring mentality, it's more fun. I think you can get to meet more people, network with more people, have much more to conversate with more people. Mm-hmm. And ultimately, that's what the millennials have created. That's the real breakthrough. In my opinion, if you ask me what's the biggest breakthrough in the last year, it's the fact that there are a gazillion channels out there, Discord forums, Wall Street Bets, all of this, where you talk about stocks everywhere. It's amazing. You can bounce your ideas off. You can see your own blind spot. That is an incredible part. And that's why when I hear that people say millennials are trading without their rookie traders, man, what they have found out in 1 year, it took boomers like 20 years to find out, because there's so much information out there and you can just bounce your ideas off. You can find people that there are real brokerages that right now focus on like somebody would a client can open his desk, his portfolio to other traders. They pay him a fee and you can see what he does. Like if there's a good trader, you can see his you can never do that with a hedge fund. With a hedge fund manager, you have to wait for the 13F. So you can know 3 months, 4 months after the fact what he bought. With this new millennial vibe, you can know real time what everyone's doing. It's pretty amazing.
Well, I think one of the biggest opportunities that they may have right now is the crypto space, as we've been talking about in this current bearish trend. where it's time to seek out that bottom. You know, when blood is in the streets, it's time to get involved, because like you said, I'm long-term just like you are, and we have to look for those bottoms. And I really like the advice of the two baskets, you know, having one hodl basket, which you kind of just hold firm to, and another trading basket, which you can kind of play around with essentially. Now, a lot of people may be like, ah, that sounds great, but I don't really know what I'm doing. So why don't we just close with that? You guys have been doing this. You guys have been managing the multiple baskets, picking the cryptos all throughout the space, and doing the due diligence. So if people want to just take a look at your baskets, where's the best place that they can go to follow you?
Yeah. Wealthresearchgroup.com is the website. You can subscribe to the free newsletter right there on the homepage, and the newsletter is like direct to your email, updates, alerts, everything. So that's one thing, and it's a free newsletter. The watch list tab, I like it because you can download all these PDFs. You can put them on a piece of paper like I have them, and some of them I literally put like limit orders in the brokerage account. So because there's like 20 or 30 companies that I'd like to buy at certain levels, I already placed those trades. If they go to that level, it automatically picks them up. But some companies I like to follow more closely. I have it on a piece of paper and actually track them and follow them. And then we will be adding a new tab in just a few days with my portfolio. You can literally click that. It's my portfolio live, like updated every couple of weeks with everything I'm doing, and it's in real time, so you can see the whole thing. And that's basically the gist of it. That's how we've done it. I also want to tell you that before the show, I created a special report about Basel III. I don't know if you guys know this, but in 6 days, a big change is coming to the gold and silver markets. And if you go to wealthresearchgroup.com/Basel, that's a city, the city in Switzerland with the Bank of International, BASEL. You can download a report on what's going on. That's a big change with how banks are going to be able to trade precious metals. We haven't touched that, but it could be something big.
Yeah, that's one for another show for sure, and perhaps we should line that up, because that is going to be big, coming in less than a week, I believe. So
yeah,
maybe
6 days.
Yes, 6 days from now. So we'll do follow up on that. It's pretty important. But for now, I'm going to instruct people to check out the links in the description below, guys. This is why I like to have Lior on. He's on top of these things. He's 2 steps ahead of the game on all things, and I've managed to do pretty good from listening to his advice. So that's why I want to bring his information to you guys. So please check out the links in the description below. Lior, once again, man, thanks so much for breaking all this down for us today.
It was a pleasure to be here.
We all want truth. The truth will set you free.